Nitesh Estates, one of South India's leading real estate brands, building homes, hotels, office buildings and shopping malls. Delivering more happiness per square foot. Nitesh Estates. Expect more.
Strategies to make your business stronger, grow faster and clock higher sales. In the latest issue of Entrepreneur, on stands now.
Welcome back. Still stable for the markets, 48.75, but more importantly, I think we should wait by for the European cues to tell us what to do from here on, because that's generally when the volatility starts in trade. So we'll wait by for that. At this point in time, of course, holding up at that 1.5% level or so. We have a caller who joins in. Ashish Shah calls in from Ahmedabad. Hi, Ashish.
Hi.
Go ahead. What would your query be today?
Yeah, the query is like my investment is there in mutual fund, but just the query is how to select a good mutual fund and good mutual fund manager. That was the first query.
Okay. You're a management trainee. You have any kind of investments? Have you ever invested earlier?
Yeah, I've invested. I've already invested and I've stayed invested also since last 3.5 years in different mutual fund schemes also.
All right, Mukesh, hi, good morning to you. You know, most of these queries that have come in today have been very elementary. I mean, a lot of questions have been about how to select a good mutual fund manager, how to select a good mutual fund, and also between SIP and lump sum, what's the better option right now? What are the 2 or 3 guidelines that you would outline for a starter?
Yeah, for selecting a mutual fund and mutual fund manager, you need to see the return part, but return means you need to see the risk-adjusted return. How much risk a fund manager had taken for delivering the return. This is the one. And when evaluating the return part, one should see not the point-to-point return. You need to see the calendar year return. Actually, this point-to-point return is very deceptive. If one fund has performed very good in the last 1 year, it underperformed 2 years or 3 years back, so it will look smooth. So it is better to look the calendar year return. And third, that you need to see the fund manager has seen all the bull phase as well as bear phase also. So we have seen, because the industry is young, so many fund managers, they have just seen the bull run only. So they perform very badly in the bear phase. And as far as the question regarding the lump sum investment or SIP investment, normally we prefer you go for the by way of SIP investment. But if the valuation is very cheap, the way if you see in the last year around March 09, the PE ratio was around less than 10. So at that point of time, you can consider putting money in lump sum also. But most of the time, it is ideally suited to go by the SIP way or STP way.
All right, Ashish, you seem to be quite young, right? You're in your 20s.
Yeah.
All right. I think the best way out for you is to really kind of pick up 2 or 3 good schemes. You know, very quickly you have to, or you should look at a good track record of a mutual fund. There is moneycontrol.com that you can go to. There are CRISIL ratings which are available. There are other websites as well which, you can look at. And pretty much in the top 5 schemes, there's very little to differentiate. So you can pick up 1 or 2 or 3 of these schemes, start small and keep at it for many years. At your age, probably you should be starting off with a diversified equity fund.
Yeah.
All right?
Right. And one more question. My brother has invested. He is quite older to me. He has invested in Reliance in another company which also offering them SIP with insurance. I have invested without insurance. Yeah.
That's something I have not heard of. Can you email it? Can you email those details to me? I'll probably look into that, right?
Yeah, sure. I'll definitely email you.
All right. Okay. Thank you, Ashish.
Thank you.
Thank you. Staying with Ahmedabad, Ashwin Kumar Pathik calls from Ahmedabad. Ashwin.
Hello.
Ji, Ashwin ji.
My specific question is, I want to invest in a new scheme for SBI mutual fund, PSU fund. So what is your review for that fund?
You seem to be having at least 6 or 7 schemes.
I have already so many funds have.
But that's
so
not a...
I want to some new fund rise to invest.
But why? I mean, you already have so many schemes. You must understand, Ashwin, that it's not important that you go and over-diversify yourself across so many schemes. You've already got 6 or 7 schemes that you're already invested in. you're looking at PSU, I mean, perhaps you need to rebalance your portfolio. Some of your schemes are doing well, some are not doing so well. But, you know, to say that I want to buy one more scheme, that's not a good idea because, you know, you think that it's 10 rupees, it's cheap, but that's not the way it is.
Okay. So, what is your suggestion for my portfolio?
Okay, I'll get Mukesh into this. Mukesh, some of his schemes are of course doing well, but some are really laggards in that sense. If he's interested in a PSU sectoral fund, he doesn't have too many sectoral funds. Of course, he's got a power fund, which is doing well. But other than that, if you see his portfolio, should he be really adding more schemes or getting rid of a couple and then replacing it with a PSU, if at all you think, it's a good idea for him?
I think he need to rebalance his portfolio. If, as I can see from his portfolio, it's 48% of the money invested in the thematic fund. Thematic fund means like contra fund, comma fund, and then this power fund. Ideally, one should have around 70 to 75% of the portfolio in the large cap, diversified, well-established equity funds. So that is the way you see the 10-year track record plus kind of thing, and put your money there and keep on monitoring it. And 10 to 15% in mid-cap fund, and maximum 5 to 10% in thematic fund if you know the sector well. If you are an IT professional, you know about the IT, then go for IT, or if you are a pharma person. So ideally, you should need to have around 75 to 80% in diversified equity fund, rest in the mid-cap fund. So, and you have already invested 48 to 50% in the thematic fund, you need to rebalance and try to invest in the well-established 10-year, in the funds schemes which have a more than 10-year track record.
Right. Which of his portfolio schemes, Mukesh, do you think he can look at, rebalancing or exiting from?
What I will say is the thematic fund, basically you need to rebalance like comma fund, contra fund. These are the funds which are on the theme based. So you come out of it and put in the large cap diversified equity like HDFC equity, which has a 15-year track record, or Birla Sun Life equity, or DSP equity. The all funds have around 10 to 15-year kind of track record. Put money there. They have a 15-year track record, delivering a return of over 30% plus kind of return. So you are safe there. Actually, this thematic fund is theme play for a very short period. It will play out for a 1 year, 1.5 years, then it will just go away. And if you are not able to monitor it timely, then you will lose the return.
All right, Mukesh. All right, Ashwin, thank you very much for calling in and hope you manage your money better in the coming days. Well, that's all we have on this edition of Your Stocks. We're leaving the markets in a healthy shape. From Sonia, me and the entire Your Stocks team, have a nice day. Coming up, of course, is Markets Midday.